I'm Leigh Brown. This is Crazy Shit in Real Estate. But today is more about education than crazy. So I hope you're ready to learn something about the possibility of reverse mortgages. And yes, it's more interesting than it sounds, and there's reasons to learn about it. If you're in real estate, you need this. If you're a consumer, you might need this. So enjoy the conversation. We've got an expert with you today, and I'll see you on the other side. Good morning, Tim. How are you?
Good. Can't complain.
So I like how we had the episode booked with Timothy with your mortgage license number, but in real life, you're just Tim. And I feel like you're probably that way with your buyers too.
Only my parents and my siblings call me Timothy, right?
Your wife doesn't call you that when you need to be called out loud?
She could yell out Timothy every once in a while, yeah, when I forget to put out the garbage, right?
Husbands never forget the garbage. Woo! Well, thank you for coming on the show. I'd love for you to tell my audience where you're located, how long you've been in and around the real estate mortgage business, and give them a little bit of a thumbnail on Tim Kennedy.
Sure. So I've been in the mortgage business since 1996, 1997. I was a mortgage broker. And that went great, right? I had a great run. And like everybody else in 2008, went out of business and went broke. And,
none of us survived, but it was hard.
Right. That's right. So I tell people all the time, at the time I had a big, beautiful house. I had a wonderful wife, and I had 3 babies, and all under the age of 10, I believe. And here we are 16 years later. I still got the same house, still have the same beautiful wife. And now I have 3 relatively successful adult children. So I consider myself a success story, right?
See, now that is perspective. I love it.
Yeah. And then for 14 years, I was with a mortgage company and had a very successful career there. And in the real estate world, for a mortgage loan originator to stay in one place for that long, they jump every 2-3 years, right? So I was there 14 years. And then about a year ago, I got a phone call from Movement Mortgage from their reverse mortgage division. And, it was funny because we didn't even discuss like compensation or, we didn't discuss anything. I said, how fast can I sign? Because that's how excited I was about the reverse mortgage product and the idea to get out there more and educate people, educate realtors, educate financial planners, educate, advisors and elder law attorneys on the idea that a reverse mortgage is no longer a last resort or last ditch effort. And actually the math tells us it's much more beneficial earlier in retirement. And so now for the last, we're in February, for the last 14 months, I've been with Movement Mortgage, and I'm very excited to be here.
Well, it is kind of crazy how quickly that product got a negative reputation in the marketplace and how many people just jumped on that bandwagon and said, this is the worst scam ever, when it's actually not a scam. It can be a really elegant way for people to tap into their equity and not use credit cards and put themselves into harm's way. So for all of our listeners, whether they're in real estate or not, give them a brief synopsis of what exactly a reverse mortgage is and some very basic mechanics on how it works so they can listening to the negative and listen to the facts.
Yeah, it's a shame that, there is a lot of negative connotation out there about the reverse mortgages, and rightfully so, because I believe in the past, we did a terrible job educating people about it. The rules, regulations, and guidelines weren't maybe enforced as strictly as they should have been, right? But over the last 10, 15 years, the federal government, the National Reverse Mortgage Lenders Association, the MBA, and lenders have made a concerted effort to make it a much more, safer, user-friendly product for seniors today to age in place and maintain financial independence. And it's a great product. As a matter of fact, I have a radio show here in New York, and we named it It's Just a Mortgage, specifically for that reason, because we want people to understand a reverse mortgage is no different than any other mortgage, except for when it gets paid back, right? I don't know if you have a mortgage, but I have a mortgage. And every month in the first of the month, I am obligated to make a principal and interest payment. With the reverse mortgage, that payment gets paid back when you leave that home permanently. right? And it's a great product because it eliminates that principal and interest payment in retirement. It could also possibly create an available line of credit for people to use as a buffer asset in retirement. You still maintain home ownership. Everybody has this misconception that, oh, no, not a reverse mortgage, right? The bank or the government is going to take over home ownership. No, the homeowner still maintains home ownership. They stay in the title of the home. It's their home. They can renovate it. They could sell it. They can move. They can do anything they want, right? With the reverse mortgage, the guideline is primarily a homeowner over the age of 62. It has to be their primary residence, and they're still required to pay their taxes and insurance and maintain the property, just like the rest of us, right? I tell people all the time, oh, no, people got in trouble with reverse mortgages because they didn't pay their taxes and insurance. Well, let me let you in a little secret. If you have a mortgage, if you have a conventional mortgage, or if you have a reverse mortgage, you're still obligated to pay your taxes and insurance, right?
Yes.
Yeah. So it's a great product. And today it's much more versatile where, in the past, it was strictly a needs-based, I'm in trouble. I lost a spouse. I lost an income. I can't pay my taxes. I can't put food on the table. I need to help my children. And people took out a reverse mortgage in panic mode, last resort, last ditch effort. But what we're finding out now and what we're really working towards is the idea of using the reverse mortgage to enhance lifestyle in retirement, right? We work 30, 40, 50 years for what? To sit on a couch? Because we can't afford to do anything in retirement? So the idea is creating the reverse mortgage to enhance their lifestyle in retirement, create this buffer asset, possibly travel, share it with their children while they're alive rather when they pass on. And then last but not least, we are working with a lot more affluent homeowners where they're using the reverse mortgage more so for tax strategies and tax advantages. So now instead of just being in one space where it's needs-based, now we have needs-based, we have lifestyle, and we have tax advantages. So we're dealing with a lot more people today and educating a lot more people today on the use of a reverse mortgage as a financial tool.
Well, I'm glad you went to that tax space because I have a question. When we look at a couple of facts in real estate, one of them is that the exemption on capital gains was baked in 1997 by the Clinton administration, where you're 250 for a single, 500
Yep.
for a married couple. It was never indexed for inflation. It hasn't moved. So now in 2025, we have people who've been in their homes for 30, 40 years, and they have so much in equity gain that they've got a lot that is subject to capital gains outside of those exclusion numbers. So if somebody were to have more in equity than their capital gains exclusion, does it benefit them and reduce their capital gains exposure to have a reverse mortgage? And all of this is said with the big asterisk of verify this conversation with your tax advisor, tax attorney, la, 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 la. There's my asterisk. But I was curious if this might help reduce the capital gains exposure.
No, because if you remember a reverse mortgage, right, it's just a mortgage. So at the end, when that house gets sold, when the last surviving spouse passes away, those capital gains would still be there, right? So the balance of the reverse mortgage plus any accrued interest would get paid back. And then any remaining equity in that home would pass on, through the estate to the children or to wherever they, leave their legacy to.
So the interest from the reverse doesn't affect the basis at all, just like because my interest on my regular primary mortgage now is a tax benefit. Is the same tax benefit in place?
So yes, it could benefit the heirs when that mortgage gets paid off. Yes.
Okay. So it's obviously more complicated than y'all should listen to.
Complicated anything.
So you should totally ask your tax people. But I don't think enough people realize that the tax person in your life should be more than your 1040s and your W-2s and your 1099s. You need to talk to them about long-term strategies to not give the government everything you've worked for. So when
100%.
people that they call you and they say, I want to find out about a reverse mortgage, what is the number one reason they call and ask for that?
Well, now because we're doing a much better job on the education. So, the bulk of my calls are still needs-based, especially coming out of COVID and the loss of income and a loss of spouses and rising inflation, and they're on a fixed income and they need to figure out to make up the difference month to month. So we get a majority of those phone calls. But I just had a recent phone call, an elderly couple. They were very well off, a lot of money in the bank, right? Pension, Social Security, but they didn't want to touch any of that money. They wanted to leave that to their children. But they had a bucket list plans that they wanted to achieve. And a lot of that was traveling to Africa and Europe and all these different off the beaten trail, right? And they took out the reverse mortgage specifically to use it as a line of credit and to withdraw the funds from that reverse mortgage to do their traveling in their 80s. And they were so excited, but that's a situation where we're enhancing their lifestyle. So we do get a lot of those phone calls now, or they want to share that equity in their home with their children today, while they're alive. And they can enjoy it and they can travel with their children and their grandchildren and not touch everything else that they have saved for retirement, right? Because remember that the funds from the reverse mortgage is tax-free. So that money that they're using is tax-free. If they were to take money out of a retirement account to travel with their children, now they're paying Uncle Sam, right? They got to pay Uncle Sam a piece of that, right? When they withdraw money from their IRAs or 401ks. Do you ever listen to or follow Ed Slott? He's
I think I know Ed.
Yeah, he's a big time public speaker up here in the Northeast. He's out of Manhattan. But one of his classic lines is, even though we call him Uncle Sam, he's really not our uncle. And there's no reason why we need to give him all our money.
That's fair. I like Ed. I might be the person on X that likes to tell people the government's not supposed to be your daddy. So I think it's in the same vein as
Yeah.
So if you're in real estate and you're listening to this podcast or watching it and thinking, man, I need some more Leigh Brown answers in my life. Well, guess what, friends? I have a new program that is launching right now called Answers.Real Estate, where I will give you every bit of insight I have to help you grow your real estate business, help you better respond to consumers, to provide a more excellent real estate experience so that the next time you land on crazy shit in real estate, you'll have a better solution to whatever you ran into. Answers.Real Estate. There are monthly plans available. You will love it. Get your coaching. Sign up with me today.
All right. So if somebody gets a reverse mortgage, is it like a home equity line where you can write checks against it and take draws against it if you decide to? So can somebody take out a reverse mortgage and then not touch it?
Yeah. So that's really the message we're trying to get out there. So people come to me and say, yeah, Tim, I don't need a reverse mortgage. I got a free and clear home. I got Social Security. I got money in the bank. No, you're actually a prime candidate for a reverse mortgage, because the idea is take out the reverse mortgage, create this available line of credit, and let it sit there. Don't use it. Don't touch it. But the idea is you may need that money 5 years, 10 years, 20 years from now. And Leigh, I don't know what you know or don't know about reverse mortgages, but that line of credit has a guaranteed growth rate factor to it. So the longer that money stays in that line, it'll give you more money later on in retirement. So it actually grows as it sits there, which is a great financial tool, right? And that's kind of what the message we're trying to get out there today is on why a reverse mortgage is much more beneficial early in retirement, because of the growth rate factor on that line of credit. Especially for people out there that may not have saved enough for long-term care. 65 to 70% of us today are going to need some sort of long-term care later on in life. And they may not be able to afford it or pay for it today. But if they create this line of credit, this will give them substantial money later on in retirement to pay those costs. Maybe they need to remodel the home with the staircases and bathrooms and, handicapped accessibility, right? And or they may need home care. How are they going to pay for that? So the idea is earlier in the 60s and 70s, take out the reverse mortgage, create that line of credit. If you need it, use it. But if not, save it for a rainy day. But there are 3 ways that you can access the money from a reverse mortgage. Number 1 is lump sum. You can take a lump sum at closing, to satisfy whatever needs you may have or pay off many mandatory obligations. We can structure it and most people think of a reverse mortgage this way, where they get a monthly payout. Well, yes, we can structure a monthly payout on the first of the month every month for a specific amount of time, or for the life that you're in that home, we could set up with a monthly payment plan. And or last but not least, what we just discussed, is the idea of the line of credit. And then you could do any one of those three in any combination, right? You could take out a lump sum, create a line of credit, take out a monthly payment, create a line of credit. Any situation you can create the different payouts.
And I would point out that the point you're making about taking it out earlier in the process than later is not just because of the built-in improvement to your numbers, but if you need it and you never set it up, now you're talking about a time lag when you'll wish you had had it already checked out. So if you're over 62, you should probably go ahead and check it out. And I'll just point out, we live at a time when a lot of people are experiencing heart issues and blood clots and stroke issues. And when that stuff hits you, it hits you like a freight train. And then when you're talking medical facilities, you may have some coverage on that. The rehab facilities are going to be a different expense altogether. And then if you do have to go to assisted living or some such, you should know that if you haven't checked it out, y'all, assisted living and nursing homes, you're talking $12,000 to $14,000 per month. And if Medicare is covering part or Medicaid is covering part, you may have a whole different situation with your house. And so give yourself the advantage of planning by talking to somebody now. And in fact, how often, Tim, do you meet with your client and with their tax advisor at the same time so that all of you can discuss it in one conversation?
Well, yes, but I just want to follow up on one thing what you had mentioned earlier is taking out the reverse mortgage earlier in a retirement. I can't tell you how many conversations I'm having today where the family is struggling with Alzheimer's and dementia. And once
even higher cost when you're talking care cost.
Yeah. And once you get to that stage, boy, it just complicates the whole process, right? So the idea is you want to try and do this when you're both relatively healthy or when you are healthy. What was the question?
The durable power of attorney setup right now, that's a whole different conversation. We could have an elder conversation, but I was asking about having the meeting with you as the mortgage guy and the potential client and their tax strategist all together for the person who maybe isn't financially astute or that's just not their bailiwick, but they want to be conservatively smart.
100%. So we always promote and prefer that when we sit down with a client that we're sitting there with their decision maker and that we have access to their financial advisor, their accountant, and more so the decision maker, because we just don't want to sit there and have a one-on-one conversation because we don't know what's going on outside of this conversation, right? And it's very important that each one of those individuals, we're all talking to each other so we know what the plan is and what's happening, right? For example, you may take out a reverse mortgage, but when you pass on, that mortgage becomes due and payable when you leave that home permanently, right? But maybe you want to keep that home in the family. So now we may want to talk to a financial planner, financial advisor, or an insurance agent and maybe attach an insurance policy to that home. Right? And now we can get the benefit of the reverse mortgage and we get the benefit of keeping the house in the family when the last surviving spouse passes away. So there's so many different ways that we can look at it. So yes, the answer to your question is we try and get as many people involved in that retirement income conversation that we can.
And hey, for those of y'all that want to really think outside the box, consider this. If the homeowner has enough land for an accessory dwelling unit, maybe they want to add a granny flat, a tiny home, convert that detached garage into an apartment, and your state or municipality allow for it, you could consider taking the reverse mortgage to build the unit on the property, which would allow that person to even live in a place with at-home care instead of going to a facility. So there's different ways to think about this. It's not just that your reverse mortgage can be used for travel or a fireplace, and it could be used to help you stay on your own land longer. And with a little side note here, wherever you are listening to this, you need to reach out to your state legislatures and ask when you're going to see some legislation for statewide approval of accessory dwelling units. It's the one thing the state of California has done right. I got to give credit where credit's due. We're looking forward in North Carolina, but I think that's one of our solutions long term for those that don't want to put your loved ones into a facility. You can keep them at home, and this might be the way to financially swing that.
Sure.
So, of course, with our show here, We're always looking for the crazy stories. I feel
I was
like
waiting for that question.
I know I'm ready for your crazy story, and frankly, I'm kind of hoping it's a heartwarming one, but you might have something crazy or heartwarming. So, what you got for me today, Sam?
I was working with a family where they're trying to keep the brother in the home. And the brother has a lot of issues that we don't have time to get into. But he got into a situation where he stopped paying his taxes and insurance. He had a free and clear home. And I was working with his sister in facilitating this whole process. It was a very challenging process. I went to the home a number of times, and just very challenging working with him and getting the required paperwork. And the house needed some, little TLC. But the crazy part of this whole story is he had people living in the home that he was collecting rent from. That's where he's getting his cash from. And on this particular day, we sent the appraiser to the home to appraise the house. And the appraiser opened up one of these doors and was attacked with a man coming at him with a machete.
Oh,
Yeah.
I
True
mean,
story.
I know some people don't like appraisers, but that feels extreme. So
Yeah, that was very aggressive, right? Yeah.
the roommate had a machete in his room.
Came out with a machete, and the thank God, the appraiser, was able to run out of the house, and they called the police, and they had the guy escorted out of the home in handcuffs. And I figured, oh man, this loan is never going to close. And luckily, the appraiser was reasonable. He went back to the home about a week or two later, appraised the home.
What?
But at the end of the day, we were able to help this family keep this individual in his home. With the reverse mortgage, we paid back the back taxes. We now set up what they call a LISA, a life expectancy set aside. We now set up an account where we, the lender or the servicer, will now pay the taxes and insurance for him. We take a portion of the proceeds from the reverse mortgage, put it to the side, and now we'll pay his taxes and insurance. And then the sister was very smart because he had still an available balance on his line of credit. And she was like, nope, I don't want nothing to do with this because then he's just going to call me and harass me for that money. So we were able to set it up where he now gets on the first of the month, every month. I forget the number, like $300 a month, but that's just enough money to put in his pocket for scratch, right? And so now we're paying his taxes and insurance. He's in the home and he gets an available line of credit. He gets available payment every month from the first of the month for $300.
And he doesn't need to have roommates with machetes.
And now, I spoke to because I spoke to the sister just recently because she's an attorney here in New York and we do a lot of business together. And yes, they finally were able to get all the tenants out of the house because he doesn't need them anymore. The taxes and insurance are being paid. He's got the $300. He gets a Social Security, gets a disability check. So, everything's taken care of, so he's in a much better place today than he was 12 months ago.
I mean, it's a very interesting solution to a problem I'm sure other people have had where you board somebody in your house to help offset the funds because you didn't know you had a product available if you're over 62 that could have helped avoid a scenario like this one.
Yeah. Yeah. He had some unsavory people in that home.
But I do want to know from my appraisers, and I know I got appraisers out there who watch this show and listen to it. Y'all are going to have to tell us in the comments where you make an adjustment for that on that appraisal form for the tenant coming at you with the machete. I'd like to know the amount of the adjustment, please. I think that's an important appraisal piece of information. All right. So, Tim, what states are you licensed in and where can you help people with their reverse mortgage needs?
Yeah. So I am licensed in New York, Pennsylvania, New Jersey, Florida, Connecticut, and Massachusetts. But at Movement Mortgage, we are licensed in all 50 states, and I have other retirement mortgage professionals. So if you're in a state that I did not mention, I have partners that I work with, also retirement mortgage professionals. Also, most of them, I believe, are certified reverse mortgage professionals. So there's roughly 100,000 loan officers out there across the country. There are 200 of them that are certified reverse mortgage professionals. And we are one of them. We're a group of certified reverse mortgage professionals with Movement Mortgage, so we can help you out.
So if you're in real estate, please ask your favorite mortgage person if they are certified in this. This is a different kind of product, and we can't stress that enough. It's important to talk to somebody who doesn't just know about the product. They understand the ins and outs. So reach out to Tim anytime. All of his contact information is in the show notes for this episode. I'm sure that Jake is going to reshare this because he will, but we didn't dance or do anything goofy. So I'm not really sure how we appeal to Jake, but here we are. And of course, Casey has built a company that's got such an amazing set
Great company.
of values and principles. So you are working for a really great company. And I am totally cracking up that you serve the Yankee states plus where they go for retirement.
That's right. I got all my bases covered.
Because we are halfbacks. They go to Florida and say, wait a minute, it's too hot down here. The insurance is too high. And then they come back to North and South Carolina. So I guess you're going to have to come to the headquarters here and add a couple of states or something.
There you go. That's what you have to do. Yeah. So I met you. Well, actually, we didn't meet, but you spoke at the Movement Mortgage Impact Summit back in early December.
Yes.
I was there for that event. That was a great event.
Oh, you were there that day? That's awesome.
Yeah.
They do a wonderful job taking care of people, and a lot of mortgage companies do the same thing, but I got to give props to Movement because they're right here in my home market, and we appreciate
I never realized what that was all about. So to be an impact lender, you have to give back 10% of your profits to the communities you serve, and Movement Mortgage is up around 40%. That's unbelievable, right?
Well, it's not, because we all know that the Lord provides, and when you do what you're supposed to do, it always comes back.
Givers gain, and it comes back. Yeah.
So, Tim, thank you so much for coming on the show, giving us a lot of different insights and ways to think about reverse mortgages. And so if you're in real estate out there, please reach out to him, get educated. If you're a consumer, reach out and get educated and make sure you know everything available to you. Say something nice about Tim down in the comments, or you can ask him a question and we'll make sure that he shows back up.
That's
to hit the
Hey,
bill.
Leigh, thank you very much for your time. I appreciate it. Thank you.
Thank you.
By the way, friends, don't miss my brand new coaching program at answers.realestate, where you can have access to Leigh Brown, submit your questions, have them answered, meet like-minded professionals, have an entire library to help you build your business no matter what happens in the market. Get signed up today. I promise you'll be glad you did. So if you found value in this episode, please like and subscribe to this channel, turn on the bell, and catch another amazing episode by clicking above. Crazy Shit in Real Estate is also available in all of your normal podcast apps. So if that's where you like to hang out, go find me, click subscribe, and most importantly, leave me a review that says you think I'm awesome, my guests are awesome, or this content is just exactly what you were looking for. And then, by the way, if there's something you need, you want to learn about something, you can comment below anytime. You can also send me a direct message if you need to remain anonymous. No judgment. But anyway, I'll only judge if you forget to subscribe and click. I'll see you next time.